What's going on, everybody? Good afternoon. Take a look at what happened here today. Starting on this daily, like we spoke about yesterday, we just wanted to see price continue to expand for these relative equal highs here. As we mentioned, this run lower to clear out this low was a run on stops. We held at this inefficiency. We get above this daily fair value gap here between this candle's low and this candle's high. So when we close above it with this candle, we now expect this to act as an inversion level. As we see, notice where this candle's body holds perfectly. We'll show you, clear up some of this. But if we look at this inversion on the daily, you'll notice that the low of that inversion is where that candle body is being held. So beautiful delivery there, holding that. We've now attacked another daily high, so we'll just look for that continued delivery. As we work down now, we were looking at this 4-hour fair value gap, so going to move the daily for a second. But as we are within this daily, we also have now created a bearish 4-hour, and now as we close back above it here with this candle, this 4-hour we expect to hold as support. We see that with the candle bodies as we deliver into that buy side objective. Clean buy side delivery, right? Continuing to respect discounts and print for higher prices. Here on the 1 hour, really seeing the same thing. So this is the 4-hour fair value gap. Yesterday's recap, we spoke about this 1 hour fair value gap holding us. So you can see how these now time frames are starting to overlap with the discounts. We expect price to really hold in areas like this, especially after this candle taps the low of that fair value gap. At that point, we don't expect any lower than that swing point. You see that holds. Spend some time in here before ultimately deciding to, like we mentioned, accelerate into that high. Notice that we fall short on this candle. Give a retracement into the fair value gap left behind before finally hitting that high. It's just important to notice that. Keep on working our way down now. 15, right? So we have the 1 hour, the 4-hour. I'm going to move the 1 hour, focus solely on the 4-hour here. You're starting to notice our other key levels now. New day opening gaps, 8:30 and the midnight level. So here we have a classic buy day power of 3. Well, we have the midnight level. We have the manipulation below the midnight level. And then we expand, closing back above. That becomes low of the day. You'll see that here in New York, we do clear a short-term low, but we still hold the midnight level. So this is what we were speaking about this morning, to where we're clearing sell side, but holding the midnight level. We would expect that this is a run on stops, and now we would want to see just this expansive move to clear out buy side here, as well as here. If we notice that during London, we had created perfectly equal highs with yesterday's high. So that's not random. We're engineering buy side liquidity, perfectly paired with yesterday's high. So now with this whole retracement, right, we're just engineering that run lower to now attack buy side liquidity. You'll see on this higher time frame, we close above that buy side. That's a good indication that we're going to want to continue to print higher and higher. So this retracement lower is simply that, returning into a discount, optimal trade entry, 4-hour fair value gap, 8:30 key level. So you're seeing how all these areas are starting to overlap. We wick into that. Something important to notice, notice that we wick into it, but where do the candle bodies hold? Right, we're still holding this new day opening gap here. So the new day opening gap holds us, we get above it. Now the new week opening gap here in white holds us. We ultimately get above previous day high, and now that area holds us as we continue to deliver bullishly into our objective. Only after hitting that do we then get the deep retracement. Label the 15 as we work down to the 1 minute now. So here on the 1 minute, we can see this run on sell side. So we had created first a low, aligned with the midnight level. And now prior to 9:30, here's our manipulation leg, right? These consecutive down close candles to run out that sell side. And now as we close back above that level, so as we close back above this high, that becomes a right break in structure. We understand we can start looking for bullish prices. Notice how we first, right? So as we zoom in here, we do kind of run this high shallow. I like to see a closure above. But as we first run this high, we create a small fair value gap. That fair value gap gives way. We never break this low, however, and then we finally push up and through, right, this candle here. So we finally break the structure. As we break up and through, notice what this candle does. Well, now it leaves behind a 1 minute fair value gap. So we would expect that this area here should hold us. I'm gonna move the 15 quickly. we'll notice that perfect delivery here, perfectly respecting that area. Right, look at this fair value gap. Candle bodies holding that level beautifully. Wicks hitting the low, bodies holding the high. We then break up and above this dashed line, which is the 830, paired with the 4-hour fair value gap. So when we see this, and now we're heading into 930, this is when we understand that we're not going to expect any retracement really on 930, and we would want to see just expansion into that buy side liquidity. That's because we have already cleared the sell side. We have put in the reversal signature, right? We have held that area. We've created the BPR, right? Notice how this area is being respected perfectly. Once again, as we leave the 4-hour, this now fair value gap gets repriced into perfectly with the candle wick hitting the low, candle body holding 830, and now continuing to expand. So now at 930, we get that injection of volatility, and we reach right into that buy side liquidity. So nice to see that. This is very obvious. Price is in a rush to reach for that buy side at this point. So as we closed above the new week opening gap, left behind a discount, we spoke about how this discount here should hold us if price is bullish, because it's showing that it does not want to, right, give any deeper retracements. We've pushed up and through the new week opening gap that acts as support, We push up and through the new week opening gap, leaving a new discount. That newest discount will act as support until we reach into our buy side objective. We hit the buy side first, slight consolidation. We then create another high, and then we actually run that high and break structure here at this low. We took a short within here at this inversion fair value gap. So after clearing the daily swing point, we would expect at least a short-term retracement into the range, especially because we have a lot of inefficiencies in here now. So as price trades up, clearing the short-term high, we notice that. We then wait for this fair value gap to be traded through underneath. That's what this candle does here, creating this as an inversion, while at the same time closing underneath the old previous high. So that's important as well. And that's where we take our first short. So we go short right on that inversion, simply targeting the low of the new week opening gap, which aligned with 5 handles for us. So quick in and out, right, catching that short down into the new week opening gap, which was nice. We end up bouncing off the new day opening gap, giving a slight retracement into this tiny 1-minute fair value gap that we left here, before ultimately diving lower, just back into, right now this is that original 15-minute fair value gap, but it's also our 830 and our 4-hour fair value gap. So as we see price delivering lower like this, we still have a higher time frame understanding of wanting to see higher prices. So don't get lost in the lower time frames. Right, on this higher time frame, we still want to see this new week opening gap here, and then ultimately this buy side pull here, which is a daily swing point, be met. So we understand that this run lower is simply returning into that discount, and once we reach that discount, we're okay to start looking for long setups again. As we head back to the 1 minute, you'll notice that we first come into this 15-minute fair value gap, hitting consequent encroachment. Here, we give a slight retracement, holding at a bearish fair value gap, and then we run lower, hitting the low of that 15-minute and clearing the short-term low. As we break back above this candle's high, we notice that this becomes our order block. We spoke about that. High probability order block, right? No upwards wick, running a short-term low while also returning into a discount. So now as we break structure there, that becomes our change in the state of delivery. We understand that we can start looking for longs now to target here, this buy side. So the short-term high first created. And then eventually, as we mentioned, just those higher time frame objectives. So we'll label this buy side for now. So we see as we create this order block, this candle here wicks into it, holds us, right? We trade up and through now this bearish fair value gap. Once we get above the bearish fair value gap, it now becomes an inversion level. We would not expect that it would be breached any lower. So we give a retracement into it. We do wick lower, right? Just wicking. Notice that the bodies hold it, however, and then ultimately we get that expansion. We shared a second entry here. So as we hold this inversion fair value gap, we want to see buy side, right? This inefficiency here as well be targeted. So when we break structure here at this high, we're seeing this as a market structure shift, bullish shift. We immediately go long when this candle taps the new week opening gap. Right, so we're going long on the new week opening gap. We understand this will be an area of support. Price is already repriced into the inversion fully and moved away from it. Right, so at this point, we're really looking at this market structure shift as all price really needs to return into before running higher. So for us, we get long here, right? We were targeting just these equal highs. So it aligns with 5 handles, remove the first entry. Notice we had this set of equal highs sitting here, buy side. And that became our target. So we get from here up into that buy side. Nice to see, right? We get out there, price we're consolidated around the previous day high just a little bit before giving another deep retracement into our new week opening gap. So at this point, we have now engineered right below this buy side, more buy side liquidity. So we still have the idea that we want to see buy side be interacted with, but we may just enter a consolidation area, especially after we've already expanded and hit the previous day's high. Right, you'll see that we retrace into the new day opening gap perfectly, into that original inversion fair value gap as well. Right, what else is there? Volume imbalance. So we understand what price is returning into here. We hit that level. We then once again create another order block here. So now as we create this, break above it, leaving that fair value gap, we would expect an area like this to hold, especially because we notice the new week opening gap is overlapped with that. So we like when we have, right, stacking PD arrays. Spend a lot of time back and forth bouncing from previous day high and this new week opening gap, right, consolidation. But ultimately, we do get that expansion up and through. Even on this whole time up in here, we can still see, right, like fair value gaps being used. Even prior to that, we have inversion volume imbalances. So a lot of opportunities to take this long. Inversion fair value gaps, right? As we close above, we can use those. So choppy delivery for sure, but if we understand what we're looking for, there's still opportunities. We hit that buy side, once again, a lot of back and forth, choppy delivery, really wonky. And then you'll notice that we hit previous day high, and then we run into the new week opening gap. So you can see how even in choppier delivery like this, the algorithmic signatures are still there. We're still referencing these levels with obvious precision, to where we had engineered sell side just above the previous day high. So now as you trade into that level, we can clear liquidity while tapping that key level. From this key level, where do we go? Well, immediately into another key level in the form of the new week opening gap. So at this point, right, we've kind of gone back and forth. We then run the short-term low again, creating a little seek and destroy. So at this point, we want to see if we can clear this bearish fair value gap. That is an indication to now look for longs again. Where we're still trying to look for higher prices. So even though we have choppy pricing in here, we understand that ultimately our objective is to see buy side targets be met. So this just becomes another target for us. We don't want to get caught up in the trap of looking for shorts. Right, buy side objectives are our objective. Any run on stops like this is simply that, right? A run on stops, short-term low being cleared before continued bullish delivery. So as we clear the short-term low, we first notice that this fair value gap here gets respected. We then get above the inversion fair value gap. Right, we do give a slightly deeper retracement into the original bullish fair value gap, but once we get above this bearish fair value gap again, we never breach that. So ultimately we hold here and get up and through that buy side liquidity. Right, once again, choppier delivery, high resistance, but we finally get up and through there. You'll notice that we wick it first, and then we finally close above it here. And after we close above it, then we get a pretty nice release to get us up and through our new week opening gap. You notice once we get above the new week opening gap, that area becomes support. We see that here, right? We never really get below consequent encroachment before ultimately delivering into that daily swing point. As we deliver into this daily swing point, well, what do we see now? Right, an obvious rejection signature. So we first create the short-term high just below higher time frame liquidity. So already we can be looking to turtle soup this. Right, we have a higher time frame liquidity and lower time frame liquidity, and we are within power hour, so we can expect, right, a retracement back into the range because it's been very one-sided. So as price runs the short-term high, clearing the daily high as well now. Say we're not comfortable in this while we wait for the first indication to go short, and that comes here in this bullish fair value gap. So as soon as this bullish fair value gap gets overtaken, we understand that's an inversion level, and we're okay to go ahead and short there. Right, so we can take short that inversion to now just reach back into just our range, right? So we can target lows, we can target inefficiencies. We like this level. Notice this volume imbalance here is aligned Let's pull up consequent encroachment. The volume imbalance is aligned with consequent encroachment of the new week opening gap. So that's a nice area to aim for right here. And that's what we could do. So we could take the inversion short. If we don't trust the inversion, or if we can't see that, right, then what do we wait for? Well, we can wait for a break of this low now. Because if we think this is just a YouTube model, right, clear this to where we have a short-term high being cleared. We then have a short-term low being broken and closed below. And this is what I mean when I say it's being broken with the fair value gap. Notice how the low of this candle runs right through the center of that fair value gap. That's a signature of a very high probability entry. Notice how consequent encroachment is where this low is, right? So that's very beautiful. We love seeing that. And this is where now you can add the second position. So this is our classic YouTube entry, right? Using either the fair value gap, stop above a swing high. You can use consequent encroachment. For this, we'll just use the low of it. And once again, same targets. Let's say that you're being conservative, or you can go 5 handles, right? There's a lot of ways to actually exit once you find the nice entry. So we see this area holds us, right? It's also the breaker formation. We then deliver into the new week opening gap. Notice how we hit that level perfectly. So we create a short-term low, right? We see that as sell side. Price retraces into now this premium fair value gap. Notice how there's no inefficiencies in here, right? So when we create this wick, we retrace, hit this fair value gap. As we break through that wick, there's no inefficient price delivery in here. This is the only area. So that's when price comes back up into that. There's no need to return any higher. We then hold this area, break lower, bearish volume imbalance, holds us, and then we get another run into sell side, and then ultimately into, right, just all these lows that we had created here. So on this leg higher, as we're running into buy side, look at all these lows created, right? Equal lows here, low, low, equal lows here. So a lot of lows, and we're able to take advantage of that. So as we head into the last 10 minutes of the day, right, at 350, we hit that sell side right at 350, right? Very random, one would say. After hitting that sell side, we just retrace back into the range high to low, get above the new week opening gap, and now we're sitting just right back inside that fair value gap. So overall, another clean delivery. We'd say classic buy day once again. We just wanted to see continued higher prices, and that's what prices continue to do, right? So we're respecting discounts, we're holding higher time frame discounts, and we're continuing to print bullish price. We would continue to look for that going forward. Right, so now we're holding this 1 hour fair value gap. We would just look for that to continue. So let's clear some of this in here. Right, I look at this 1 hour fair value gap. I like that. We have a new buy side target here. We've just cleared this buy side, new buy side objective. Ideally, if we can hold above the new week opening gap, that would be best case scenario. So hold above new week opening gap here. Right, this is the 1 hour fair value gap. But at the worst case scenario, I would give this 1 hour fair value gap here an opportunity. So as long as we're above this, we'd like to see higher prices. So CPI tomorrow will be up early to watch the announcement. Right, 6:30, or I guess, excuse me, 8:30 Eastern, 6:30 my time. Yeah, until then, have a good night, everybody, and we will talk again bright and early tomorrow morning. Take care.